Is the Palm Beach County real estate market finally crashing in February of 2026? If you've seen the headlines, foreclosure rates are rising. We're in a housing bubble. Look, if you're considering making a move in Palm Beach County, you need actual data, not headlines. My name is Casey, and today we're going to look at numbers, not news headlines. For example, median pricing in Palm Beach County is actually up year over year. But here's the thing. Not all towns and cities in Palm Beach County are acting the same, and we really are in kind of a split market right now. For example, if you're looking in Jupiter Farms, your strategy has to be completely different than if you're looking for waterfront in Jupiter. Same goes if you're looking for a townhouse in Wellington or a condo in West Palm Beach. Across all product types in Palm Beach County right now, we're looking at about 6 months of supply. Buyers, you can negotiate about 5% off listing price, but you have to know how to work the offer. In this video, we're going to look at things like days on market, sales to list price ratios, months of inventory, and I'm going to do something a little bit different this month. We're going to take a look at the pending sales, as right now I think that's our best leading indicator. So let's take a look into my often broken crystal ball and see what's happening to the real estate market in Palm Beach County. Palm Beach County real estate market update, February of 2026. How's everybody doing? All right, let's get right into the numbers. Median sold price, $538,500. Look across the chart. What have we been saying? We don't see prices collapsing, right? Year over year, we were at, 522. We're at 538 now, so slightly up year over year if you want to pay attention to median sales pricing. I don't put a whole lot of weight in it. Just my own personal opinion. I don't find a whole lot of value in it, but and I've said this before, it's just because of the dichotomy of properties that we have here. I live in Jupiter Farms. It's in no way comparable to the waterfront in Jupiter. I live in a single family home that's a condo, so you get the idea. Anyways, bottom line in this chart is just to note that the market is not falling. Things are not collapsing. Once again, that the death of the real estate market in Palm Beach County has been greatly exaggerated, to say the least. All right, total number of properties sold, 1,308. Let's see, we're down year over year from 1,570. So, off 8% or so year over year. Not terrible. If you've been watching me for a while, I point this out. Are we surprised at all that the number of sales declined from December to January? Not in the slightest bit. Why? Happens every single year, right? Here's January. Here's January. Sales bottom in Palm Beach County every single January. So this tick down, not a surprise in the slightest. This is where things start to get interesting, is next month going forward when we look at the data. Because as we've seen every year, we should be running up here. We should come off the lows and run up into, April, May. And that'll help us gauge how strong this market is right now. As I've said, I have a belief that we're going to be level, if not slightly up, in the total number of sales. So we'll play a little game of, was Casey right or wrong? All right, sold to list price ratio, we're sitting at 95%. Look, you look across the board here. We've spent a couple of years now being pretty level here. Who wants a lower sales to list price ratio? Buyer wants a lower ratio. This just shows how much off original listing price buyers are able to negotiate on the whole. So if you look here, buyers are negotiating on the whole, call it about 5% off of listing price. That's pretty normal now. So if you're getting a property under contract above 5% off its original listing price, not its reduced one, you're right on the market. If you're doing better than 5%, you're ahead of the rest of the market. So that's how I kind of like to look at and use this. Of course, sellers want to be up here where, we have bidding wars and whatever they ask for the property, they're getting more than that. That hasn't happened for a number of years. That was COVID. Again, we're pretty neutral here. We want to keep an eye on it. My thesis has been that what's happening now is sellers that are coming to market are recognizing they can't price like crazy town. Look, I've said in the past, and I will continue to say, Right now, I would still prefer to work with a buyer over a seller in terms of negotiating power. I feel like I can negotiate better for a buyer than I can for a seller. That being said, the listings that I have on market now and that are coming to market, the discussions I'm having with the sellers, it's a very clean discussion, which is you need to be the best condition, best looking property in whatever price bracket we're looking to put this listing price in. You can't mess around. This isn't the market for aspirational pricing. I think you have to go back to basic level. It requires not only some analysis but some nuance to really hit the nail on the head here. I think that if you're pricing well and you're putting a good product out there compared to what else is out there in the price point, you're going to sell likely in a reasonable period of time. That's how I'm encouraging sellers at this point to list. Buyers, again, I'm encouraging some negotiation. I'm not saying that I want to throw offers in at 15-20% below listing price if I can't substantiate it. That's just a good way to tick off a seller and have them come back hard on the other side and say, I'm unwilling to negotiate, where if you come in a little bit tighter in the range, maybe you can get some movement. So these are just kind of strategies that I'm using now with people I'm working with, both on the buy and the sell side. Median days on market. Of course, who wants higher median days on market? Buyers want higher days on market, right? It means you're not pressured to make a decision. However, sellers want lower days on market. It means that buyers are pressured. They have to make a fast decision. We're sitting right now in Palm Beach County at 55 days on market. Now, this is where I say, you got to be a little careful with this stuff, right? The condo and townhomes are likely dragging these days on market, though townhomes are trading, honestly, pretty briskly at this point. Condos are still a challenge. But if you're in a single-family home in a neighborhood that's selling relatively well, throw this 55 days out the window. It isn't going to matter one single bit. You have to look at the number of sales that are located right around you to get an idea, kind of granular of how quick you're going to sell. And buyers, you have to do the same thing. If you go into a marketplace and you think, well, I got plenty of time, 55 days on market, I don't have to, but the neighborhood's trading at 14 days on market, 20 days on market. You have to know that. And you got to work with an agent who's telling you that stuff. And if you're not, cancel that agreement, give me a call. We'll work through it. Median price per square foot. If you've been watching me for some period of time, I really don't pay attention to median price per square foot because we do have such a divergence of real estate. If you want to spend $300 a square foot and be on Palm Beach Island, ain't going to happen. Conversely, if you want to be closer to 95 or in some cases more inland at 300 a foot, it's feasible. So you just kind of got to know where you are and again, given the price bracket that you're shopping in, and kind of fine tune what dollar price points or what average price per square foot that product that you're looking at is selling at. And that's a better gauge than this, which is just generic to Palm Beach County. Where I do find this useful, of course, I've said this again, is to show you that prices aren't falling, folks. Despite what we keep hearing, ain't happening, right? Something of interest to note there. Total dollar volume, another one I tell you don't take very much of a look at. We get these spikes here because if you look at the timing of it, so real estate in general, the most active time for real estate across the country, if you just kind of want to use back of a napkin, is the summertime. That's when most properties sell. We're a little weird here because we peak, April to May. Why is that? Well, we have a huge second home buying clientele that comes in. That clientele doesn't want to be here in June and July. And the number of people that are selling and buying homes to switch school systems, which is what you typically see throughout the country, that's more muted here in Palm Beach County. Now, again, I keep saying this is granular. If you're in a neighborhood that is off the water, you're not in a second home community. I live in Jupiter Farms. There's probably a dozen of the 4,400 home sites here. There's probably a dozen home sites, not including Ranch Colony, that are second home owned. we're going to have active summertime sales activity here. So you really got to know what neighborhood you're in and how that neighborhood transacts and what it looks like. And this has to be part of your research process. So again, use this, I guess we'll use it to track if we look at this spike up, which we're expecting to come next month, to see if we're tracking like all other years. Now again, some neighborhoods, this chart may just look flat. This is for Palm Beach County on the whole. So that's how I use that data. All right, before we pop into supply numbers, my all-time favorite number, I just want to backtrack for 1 second and show you guys this. These are the pending listings. You can see we have 3,700 pending listings, way up over the month of December. This is our leading indicator. So if you want to know what February is likely going to look like, you flip over to pending listings. So my often broken crystal ball has said it looks like we are going to be coming into a stronger month here next month when we're looking at this data. Just kind of something to keep an eye on. And the reason I want to show this is simply if you're a buyer and you're wanting to know where the market's trending, you're better off looking at pending listings than you are at my sold data. I just don't have time to run through all these different slides and such. But if you're an active buyer and truthfully, if you're an active seller, it's good to flip over the pendings and see, if nothing else, just the total number of properties. So I think that's kind of an important little side note to make. So let's continue on to supply of inventory. All right, here we are, my all-time favorite statistic, month supply of inventory. Look, not a whole lot more in my opinion than you really need to see. If you're looking at a real estate market, the first thing I want to see is what supply of inventory looks like. I want to know how competitive the market is. I want to know who it's favoring. Now, the back of a napkin number for across the country is 6 months of supply, favors neither buyers nor sellers. But you do have to look at a longer term chart like this to see what your area really looks like. For us, it's usually around 4, maybe up to 5 months. If you drew a line straight across and you kind of wanted to do 50% on top, 50% on bottom, I'd say you're somewhere right around 4 months. So with 6.38 months of supply, which is down from over 7 months of supply year over year, it does, for me anyway, there we were, 7.08 months this time last year. So we're down slightly year over year. At 6.38 months even, does this feel like a buyer or a seller's market? Again, look back here. If we say 4 months, not 6, is what really we're going to use as our dividing line, we're still pretty firmly in a buyer's market for most of the property types. And again, there's pockets where this looks a whole lot different. But I'd still rather be a buyer than a seller in this market right now. We're going to want to keep an eye on supply, because if people decide that they don't want to sell and the supply comes down, it's going to get tighter for buyers, right? Buyers want more supply. Sellers want less supply. I do think that over the last couple of years, both buyers and sellers have been sitting on the sidelines. A lot of sellers tried to sell. They ended up canceling. I think that's decision-making time. Do I keep the property on the market or do I sell? Now, keep in mind, folks, real estate has some ugly sides to it. I shouldn't say ugly, I should say not fun sides, and I get to deal with them all the time. Those can come from death of a family member where a property's inherited and it just doesn't make sense to keep carrying this. Maybe you've been carrying it for 2 years, paying taxes and insurance, and the market's not moving, and you're just eating away at the equity that was there. Divorce happens, unfortunately. When divorce happens, the asset has to be split a lot of times. Those cases, people can't wait on the sidelines of the market. Job loss happens. You have equity, you can retain the equity if you act quickly. If you sit around and want to wait to see if the market's going to go up, meanwhile you're still paying the mortgage and your savings are dwindling down, probably not the best plan. Conversely, if you're a buyer and you're saying, I'm just going to wait until interest rates continue to fall. I don't think that's a good idea. I think in that situation, if you're looking for a lower interest rate payment, you're better off working with the seller to try to organize some kind of seller's concession where you can get the seller to pay towards your closing costs and prepaid, which could be your mortgage rate buy down. That would be the way I would approach getting a lower interest rate at this point, rather than just crossing my fingers and hoping that rates are going to come down. I don't think that's a very good plan, guys. So, hey, look, that's what I got for you this month. Please, as always, give me a call, 786-443-7203. Let's talk about real estate. If you're too shy, you can email me. Text me if you want, but one way or another, let's get in a conversation. Let's go have a cup of coffee. Let's talk about real estate, and I'll see you guys next month.